world, yeah, yeah. I'ma rule the world, I'ma rule the world, yeah. 색다른 느낌으로 만든 음악 나만의 세상 만들어 장악 I'ma rule the world, I'ma rule the world, yeah, yeah. I'ma rule the world, I'ma rule the world, yeah. 해가 지고 뜰 때까지 I'm up, yeah.
I cannot be more thrilled tonight to have an individual who understands energy investments. He probably understands it more than 99.9% of people. Cole Smead is CEO and portfolio manager at Smead Capital Management. He oversees global equity portfolios with a value investing approach, and it's rooted in a lot of history and deep understanding of economics. Cole, thanks so much for joining me. I have a hot take question for you just to kick things off. Are you investing your money into Canadian energy today?
The answer is yes, and it couldn't be a better time to be doing that, to be honest.
Tell me more. I want to understand why you're saying that.
Yeah, I mean, just take a broad view. Like if you're Canadian, look at the loonie versus the dollar. When the loonie is at par with the dollar, it means everyone loves Canadian energy equities. That's what history argues. And when it trades at a big discount, it means that the energy business is not well liked. And that's a pretty good simplistic way of thinking about the long-term pendulum of Canadian equities, but also the energy business in Canada.
Let me ask you this, just with regards to the outlook for Canadian energy, does it change for you? I know that a cross-border pipeline deal isn't really highly regarded as a priority for the federal government, although it being one for Alberta. If the federal government doesn't want to support a energy pipeline, to the United States, rather increase domestic growth, does that pose for any scalability issues or any lack of just scalability in terms of growth for these energy companies in Canada, or you don't really see that as a problem?
I would say no. Let me comment on the pipeline thing really quickly. We look at the WTI to WCS spread, so just the difference between what effectively Canadian oil's price relative to U.S. oil. And you'll see that spread has been coming down over the last few months relative to the past. Normally, it's $15 to $20. It's been really sub $15 for a lot of the last few months. And I think what the markets are beginning to price in Canada is the idea that pipelines aren't going to just be going south like they have in the past. So you think of like a Keystone XL pipeline and those kind of discussions, that's going south to the United States. Really, what you're going to find is there's a much more pragmatic conversation around pipelines east and west, aka you're not as fixated on sending oil to America. And I think that's coming out of the politics. I know that from an Albertan perspective, there weren't many people that voted for Carney in Alberta. At the same time, if you listen to what Carney's saying, he's way more pragmatic than the last prime minister, obviously Trudeau. And so I just think you're seeing a much more pragmatic conversation on getting Canadian energy out east and west to the Atlantic or the Pacific. But that doesn't change how tight the global oil market's likely to be. And Canada is going to be center stage for meeting that need.
When you say the oil markets, just from a global perspective, give us just a full rundown in layman's terms for us, just to understand what the need versus maybe not needs would be. I know that we saw, the USA and the EU sign a deal which involves a ton of energy development and trade there. I just am curious, how does that change Canada's relationship with the EU, or is there room for both?
Yeah, so I'll give you a way of thinking about it longer term. So if you look at energy consumption, whether we're talking electricity or natural gas or oil, human flourishing, aka economic growth and incomes going up across in the world, that's what causes more energy consumption. So the bias people should have in the long run, the economics are terribly positive and humans flourish, which means there's always long-term need for energy. And I think one thing that we lost on a lot of people is the idea that we're so much more efficient because of technology that we're going to use less energy, kind of an energy starvation idea. And that's just never what happens. If you think of all the great technologies, think of AI. I was using Grok 4 yesterday, getting some super old school data on stocks and stock returns. It took me an hour to get 5 questions answered. It took a ton of energy. And the reality is without energy present to do that, we could never do that. We can't starve our way to that future. So let's just say we need 1 million barrels more of oil per year every day to go out and meet the needs of the world in the next decade. That's 10 million barrels we need in 10 years. And every year there's about 2 million barrels that get depleted out of existing assets. So if you do that math, it's -2, you got your +3. That means you need 3 million barrels of supply meeting the old assets plus the new needs. and you're not going to find enough investment going on out there. That's part of the reason why Canada is so attractive, is that there's long dated assets in the tar sands, in Alberta, for example, and those long dated assets means that they can meet the need over the next 30 to 50 years. And there's just very few people. The Permian, shorter assets can't do that. And therefore, there's a lot more reinvestment.
Cole, thank you. We'll be right back to discuss your comments a little bit more between East and West Pipeline. Stay tuned for more.
Rule the world, I'ma rule the world, yeah. 해가 지고 뜰 때까지 I'ma, yeah. I'ma rule the world, yeah, yeah. I'ma rule the world, I'ma rule the world, yeah. 해가 지고 뜰 때까지 I'ma, yeah.
Speaking earlier specifically about East-West pipelines, Canada expanding its relationship domestically with provinces, which is a great thing. We're seeing that grow and increase more and more. But then we also talk about the EU. And I want to specifically talk about the trade relationship between Canada and the EU. We just saw one of the first LNG shipments leave from Canada's BC port and go off to Europe. Are we going to see more and more of that? Is it scalable? Are we going to continue to see that grow? And as an investor, how does that influence your decision on investing in Canadian energy?
Yeah, exporting has been going on not only, Canada for the first time, but that's been going on in the United States as well. We've been exporting from places like Houston, for example. Companies here that have specialized in that would be like Cheniere Energy, for example. Originally, they thought they were going to be importing it, and they later figured out they had to trade their business model out in the 2010s to export it. The reason why is because the pricing of natural gas in Europe is much higher than you get in Calgary or, say, Houston for pricing. And so they're just arbitraging the global price of energy in the case of natural gas. Now, that being said, I think one thing that gets lost on this conversation is that will be beneficial to Canada. A lot of people in the near term have got really excited about things like AI. In other words, if the world uses AI, we're going to use a lot more natural gas. I think the only thing is that, how this grows is the real question. I expect Canada, or we expect Canada to export more LNG. And I think Europe wanting to do more stuff like build up their defense budget, and their economic activity is looking just stronger than people would have assumed 5 or 10 years ago. That's all good, particularly with the defensiveness the United States has had in their own trade policy, as Canadians have responded to in the polls around things like that. So I think that will pick up. Is that going to be the most dominant way to make money in Canadian energy? No. It's a great thing for the export markets. It's a great thing for the LNG markets. If you go look at what they call AECO pricing, which would be the price that natural gas is trading at in the middle of Alberta, it's less than $1. It's practically being given away at these prices. So any of these resources that can get out
Cole,
at a cheap cost.
Help me understand that. Like, when you say that, just the average person, even I hear that and I'm like, that doesn't make any sense to me. Why is it that Canada's LNG sector is priced so low?
Yeah, because there's an abundance of it. That's the problem with natural gas, is there's just an abundance. I mean, if you think about it like this, here's one of the things that most people don't understand. Let's say natural gas prices go low. Okay, well, there are some producers out there that only do natural gas. So the biggest in North America is a Canadian company. We don't own them, but just to mention them, and they're really well run, is a company called Tourmaline Oil. Mike Rose runs the business. I think the world of Mike Rose, we've never been a shareholder of it, but they're really good at that business. And what they're really good at is getting long-term contracts with people that need, natural gas. Okay. Now that's someone that's got a long-term take or pay contract. If you're just selling in the open market today in the cash markets, that's why the price is so low, is that there's no long-term commitment for you to provide that to someone. So as you put that all together, the reason why it's so cheap is because it does not have access to get out attractively. So the price is low because it's tough to get out. When you have low prices like that, you don't really make any money selling it. When nat gas prices go low, the nat gas producers like Tourmaline will just shut their production. They'll quit producing. But you got to remember, natural gas also comes off of oil production. It's a byproduct. So the oil producers, even if nat gas is low like it is now, they'll still produce nat gas even though they really just want the oil. And that's why, historically speaking, nat gas markets have been much more depressed than oil. Now, I'm not saying that means natural gas can't do well long-term, but it shows you that in each of these markets, there are uniqueness tied to getting the commodity out or another commodity that might directly affect it that causes pricing over short or long periods of time to be much different than you would assume.
Cole, let me ask you this. We got about a minute left here. When we talk about LNG expanding in Canada, it's something that even I thought was a massive opportunity. But when I hear you say that the price is so depressed right now, how can Canada make more money from its LNG if it has so much of it? Is it expanding growth and being able to service way more growth between the EU and Canada? Or is it, like an increase in LNG being able to make it down to the United States? You've got about 30 seconds here, Max.
Yeah. So what you want is the world to win. I mean, if the world needs natural gas, you're going to export a lot more Canadian natural gas. That's just you're going to be in the LNG market in a much bigger way. So Asia winning, Europe winning, and their dominant source growing to be natural gas, which is more emissions beneficial to the world. That's where you're going to go. Look at the United States, look at Canada. As we've succeeded as countries and we've got wealthy, what you've ended up having is higher consumption of natural gas, which ultimately means cleaner fuels, and we continue to grow with those cheap fuels.
Thanks, Cole. We'll jump right back in. I want to speak to you a little bit more about Canada and U.S. relationship in oil and natural gas coming up.
I'ma rule the world, I'ma rule the world, yeah. I'ma rule the world, I'ma rule the world, yeah.
Cole, I have a question that I know a lot of people are wondering, and just to articulate this in the simplest way possible, why do I think Canadian energy, specifically natural gas, but even oil and natural gas, will continue to grow if we can't strike a deal with the United States? Plain and simple.
We're too beholden to Canadian energy in general. You look at, there's about 4 million barrels of oil that come across the border every day via pipelines, or occasionally they'll come via truck or rail. And we can't deal without that. Now, some of that does go down to the Gulf of Mexico or Gulf of America, depending on what your flavor of choices are. But ultimately, that's got to meet the market. And that goes back to that whole idea of the market's not as broad as people think. In any commodity business, anybody that produces on the margin, you know that a little too much can ruin pricing and a little too little can make prices go way up. That's why, big global conflicts tend to swing the oil market, like we saw with Iran being bombed, for example, the fear over losing supply. And America really needs that supply. I touched on this earlier, but I think as we look at this, if you think of the tar sands, those are long dated assets, so 30 to 50-year assets in a lot of cases. Our Permian Basin down in West Texas and New Mexico, that's 7-year assets. So as you deal with the difference in those two ranges of assets, what you'll find is that if we're not willing to reinvest every 5 to 7 years in our assets, that's where you become really reliant and beneficial of a trade relationship with the long-dated Canadian energy assets. I would say, I think that's obvious. Now, let's just theorize. We were kind of joking around about this before, but I mean, look at the loonie relative to the dollar. There's a lot of things that you can do in Canada for a lot cheaper. And what, under the laws of comparative advantage that David Ricardo came up with many, many years ago, it's that what one country does good at one thing, it's in the interest to share along with their trading partners, because their other trading partners might not be the best at what they do, but you're better off focusing on what you're great at. One of the things Canada's great at is energy.
Cole,
so
let me ask you
I look
this.
at that as a mainstay.
No, thank you for that. Let me ask you this question. Is it obvious to the United States, specifically the Trump administration, that Canadian oil is needed?
Let's just say yes, because a lot of this is protected under USMCA, to call a spade, and that's something that Trump's always been interested in. But, you can't take everything literally. So, for example, the Trump administration will say, we want low oil prices. Okay, now that's what they'd like. Now, if you go look at low oil prices, recently, what's happening in rig counts and frac crews, which tend to be leading indicators of future production in, say, the United States, they're dropping off a cliff. So if we want to have energy independence in America, we need an abundance of our own energy. And think of law of economics, right? You give someone a lower price, what do? They produce less. So low oil prices, what are they doing? They're causing America to produce less energy. That is not a good thing for America. So again, when you hear that, you got to remember, you have to listen to who his constituent he's speaking to. He's speaking to average people that they want to think that he's very much interested in a low price at the pump. The only problem is low prices cause high prices, and high prices cause low prices. That's the way commodity markets work. And so you have to be thinking about who he's speaking to. Is he always thinking about Canadians when he speaks? No, he's trying to think about his constituents. And so you have to be very careful about what he says versus what's going to go on in
So,
supply
Cole,
and
let me
demand.
ask you this. When it comes to a deal between Canada and the United States, we've got about a minute and a half here. What do you feel a deal between oil and natural gas markets would look like between Canada and the United States? What would make sense? You're the Trump administration right now. What do you want? But you're also playing the side of Prime Minister Mark Carney. What do you see as a reasonable and realistic outlook on what that deal could look like?
Yeah, well, if I'm Mark Carney, I make more money selling oil than anything I do in Canada. I mean, it is the dominant driver of federal revenues to Ottawa, and therefore it's too important for the Canadian economy. So what I would want to be thinking about is, let's just say this disagreement and trade is going to go on for a while. How do I unburden the Canadian economy and create less regulation to go sell a lot of our products to the rest of the world, so you're not as beholden to this discussion? That'd be one. And the second part is, how do I take what I do a lot of and really good at, which is energy, and how do I cause that to be even greater? And so that's back to the pipeline ideas. I think you're going to see the government be a lot less interested in things like emissions like they were in the past. They're going to be a lot more interested in how do we distribute what we're great at, and pipelines are a great way for Alberta to get its best product out of the market and get that off to places like Asia and Europe, to your point earlier.
Cole, about 15 seconds here. What do you feel is the biggest missed point in any discussion with what we're speaking of?
Yeah, as though Canada isn't a great trading partner and they're wonderful people to do business with. I think that's easily lost on both Canadians and Americans. And I think we're too vital and too good allies for that to be lost in the discussion.
Fair, fair. Cole, we'll continue our discussion to end it off just in the next segment. We'll be right back. Stay tuned.
I'ma rule the world, I'ma rule the world, yeah, yeah. I'ma rule the world, I'ma rule the world, yeah. 해가 지고 뜰 때까지 I'm up, yeah. Rule the world, I'ma rule the world, yeah.
Cole, just to continue our discussion here, we've got 5 minutes to close this off. So far, it's been fantastic. One of the notes that I've written down is about attracting private investment into Canada. You know, a lot of people talk about this, but you live it. You are one of them. What do we need to do in order to attract private investment into Canada, and what factors will play a role in significantly influencing, people like you in buying Canadian energy stocks?
Yeah, well, I think Canada is a market that will be attracted by foreign capital, beyond just also domestic capital too. So it's actually a great question. We're in the process of setting up an entity in Canada to serve Canadian investors directly. So we're getting to see, to your point, we're getting to see what the tax regime is, and we're getting to see what the regulatory regime is. We're kind of walking through the process an investor would to set up a company there in Canada. So I think it's an excellent question. I would say in general, English speaking is great for someone like us coming from the United States, because that's an obvious benefit. And so I think that's a natural thing that most companies like when you think of rule of law, things like that. I would say this: you got to remember what the United States private investment is, say in places like tech. Canada can't be that. So when I think about private investment in Canada, it's going to be just in different subjects than that, because you need to amass a lot of intellectual capital and financial capital around certain things. So historically speaking, that has been more in commodity-oriented markets. Now, that being said, in more capital-intensive markets, I think you're going to see less private investment than the past. Part of the reason why is, think of how frustrated people have been with Canadian equities, say, compared to the United States equities. And ultimately, it argues that Canadian stocks are going to be, and companies are going to be more scale. They have to be really great at what they do. Otherwise, they're not going to be in that. So I think we're actually going to see the other end of the pendulum quicker in Canada. And we could touch on this, but you think of the Canadian banks, there's not that many Canadian banks. They're all scale. I think that's what we're going to see in Canada a lot sooner in a lot of industries.
Especially with the energy companies. You were mentioning that. We'll get into that in just a second. A deal between the United States and Canada, if that were to happen, would we see an increase in private sector interest into Canadian energy sector, or no?
I think what you'll see a rally in the Canadian dollar. And I think that will kind of put affirmation to the idea that people feel more comfortable about buying Canadian assets. And again, from where Canadian politics were not that long ago, I think the bar was set really low. The old saying is, secret to life is weak competition. I think Mark Carney is really weak competition coming into his role. And so I think it's only upside from here, when it comes to the idea of the Canadian business environment, how to create a good regulatory regime, kind of like we talked about, and also just where does taxation go? I think you'd want to be a natural fan and really cheerlead if I was in Mark Carney's shoes. But again, that's for his opportunity. But I think it's really a good setup for the Canadian economy.
Cole, I've never heard this take from anybody else before, but you brought it up. It's a hot one, but I see where you're going with it. When you speak of consolidation of energy companies in Canada, you're saying there might only be 3, 2, 4 in 10 years? What led you to that conclusion?
Yeah, other capital intensive businesses like the railroad. So you think of Canada, you got Canadian Pacific Railways, you got Canadian National Railways. That's the railroad market in Canada. It's capital intensive, it's cyclical, it's tied to the economy. It has to do with human flourishing, like we talked about earlier in the energy stocks. Those same factors are at play in the energy business. So, if someone said Canadian Natural Resources, that's going to be one of those, say, three. You have someone like Suncor, that's going to be one of those three as well. Is it going to be Imperial as the third, or could there be another player? I think, as you look at, there's a deal going on right now between Meg Energy and Calgary and Strathcona Resources in Calgary there. I think they're going to merge, and we could see a third that doesn't end up being Imperial Oil. And I just point all that out because ultimately, in a capital intensive business, scale is all that matters. And when you get good scale, investors get better returns. That's where we're going over time. It's like that's the arc of history in 15, maybe 20 years, the latest. So if you know that, the question is, who is kind of making love with who and who's marrying who, and love is definitely going to be in the air.
Cole, that is a very well put together argument for why you think consolidation will happen, especially if both companies see a benefit in merging. They can just continue to scale and service everybody, and they all make more money, right? So, Cole,
Yep.
Thank you so much for joining me. I really appreciate it. Thank you.
Thank you.
Look, if you disagreed with anything that we discussed today, then make sure to comment on our social media at My Generation. Follow it or send me an email. And with that, we'll end off with this. Remember, do not simply accept what you are told. Challenge your thinking, engage in differences, and hey, try to listen to new perspectives. Thank you, and have a great night.
I'ma rule the world, yeah, yeah. I'ma rule the world, yeah.